Good morning, traders. Excited you guys are in here today. Got a really good one for you today. We're going to be going over my trading rules I use for my CMEG account. Now, you can apply these to any account, any broker, but these have really helped me over at CMEG personally. These may not apply to you. This is not a generalization over everybody's account. Everyone has their own emotions they struggle with, their own problems in their own personal trading journey that they struggle with and they have to overcome. We all have different hills to climb, and you just got to create rules that are going to really help push you, towards success and towards profit. That's what we're all after, towards that profit. So let's go over my trading rules today. Excited to get into them. Let's get into it. Now, you guys may be asking, Kevin, why do you have all your rules up on a whiteboard? Well, guys, I want to make sure I see these every single time I step into the office in the morning because just to make sure, I'm not going to forget them. I got to sometimes just throw them in my face just because some of these things that I have problems with, I just have to be well aware of them every single day. It's just me. For instance, every single morning I'm up here really early, 7:30, 8 o'clock. Some of you may be earlier, whatever. I'm up here for roughly an hour before we go over our pre-market analysis, just figuring out the best plays of the day. What I want to trade, what do I not want to trade. And so I have a rule up here, no pre-market or after hours trading. It's very tempting to get into a trade when I'm staring at stocks for an hour, but you just have to understand that this is what you got to do in order to be successful. You got to do the before work. Now, I used to be in the film industry, and all the work was done in pre-production. You had 3 different types of production: pre-production, production, and post-production. All the work was done before the movie, the years, all the preparation, all the writing, all the work, getting everything situated. Shooting the movie, only took a couple weeks. That's it. You're essentially just you're executing. You're executing the game plan. And that's what we're doing with trading as well. We get up, and we figure out the game plan. And then when the market opens, usually I'm done trading in 15 minutes. I'm just executing the game plan. That's all it is. I'm just pressing the buttons. Everything's already mapped out in pre-market. And that's essentially what we do in pre-market. We write the blueprint. When the market opens, we build the house. Now, each one of our blueprints is going to look a little different. And I'm going over these blueprints that I have written out for my own personal trading. I'd love to hear yours. I'd love to hear what problems you struggle with, what rules you need to put on your own personal trading account to excel your growth. So the no pre-market and after hours trading, why do I really even have that in place? Well, it's just because I've been caught in a bunch of offerings in pre-market, and let me tell you, it's not very fun. I've never been on the right side of an offering, and that's still on my bucket list, and it's frustrating. Never been on the right side of an offering, and most of the time they do come out in pre-market or after hours. It's just because of how liquid it is. It's just the way it is. And with that being said, haven't seen a lot of success trading pre-market or after hours, so I'm just done with it. I just made a rule. I'm done with it. I'm not seeing a lot of success. Why keep it? So we just nix it. We get rid of it. It's very illiquid. It's very spready. It's hard to get in and out of those stocks. So I just said scratch it. I'm not going to do it anymore. I mean, the market's not even open. If you're wanting to go shop around at a business, you're not going to try to get in the door before the doors are open. Or you could, and if you do, well, there's some repercussions. That's a terrible analogy. All right, let's move on to number 2. No low floats. Now, this is a rule for me specifically, but like I said, not everyone needs this rule. For instance, chat room gurus, they don't need this rule. For them, they only trade low float stocks, and that's going to be on their whiteboard. Only low float stocks. We can't pump a stock with 100 million shares in it with our sheep. How you going to do that? We got to trade low float stocks, 10 million shares or lower. We're going to get the sheep in it. We're going to rotate that float. So no low float stocks. We all get into it when we essentially start trading for the first time. Every one of us, we all got into the low floats because that's what all the chat rooms trade for a reason. But the thing is, there's opportunity everywhere. Everywhere, guys. You don't want to just narrow in that kind of field of play just to low float stocks. As traders, we're what? We're hunters of volatility. We are managers of risk. And there is opportunity every single day. When people say the market's slow, it's absolutely not slow. Most of the time there's opportunity. When people say not a lot of plays today, it's probably because they don't see a low float stock popping on up. There is thousands and thousands and thousands of tickers. There's something moving usually most of the time. And that's what we're looking for. We're looking for stocks that are either moving up or either moving down. When the market's going flat, there's no opportunity there. But when it's up, when it's down, there's opportunity, and that's what we're seeking. All right, traders, number 3, and this is a very important one on the whiteboard that has really helped me with my trading, is no predicting, no bias, only reactive trading. So prediction, when you're predicting what a stock is going to do, you're creating that bias for yourself. And where is that bias usually derived from? A lot of times it's from the PRs. Fundamentals, or what they call fundamentals. These are usually just in place to get longs, interested in the stock. It's just to kind of trap longs into the play, so insiders can dump the shares into the longs. We see it all the time, guys. PRs. Some companies coming out with like the hottest PR like every single week, and everyone's jumping into it. You just got to understand fundamentals are usually not where you want to be with a stock. You're saying, oh, look at that news. This stock's going to go up forever. You see that news? You're part of the 90%. The 90% of traders, they just look at the headlines, the fundamentals, and then they say that PR is great, I'm buying the stock on up. Now, it's not a bad idea when you're doing fundamental analysis to understand which sector is hot, and COVID sector is hot. This has COVID news. We're probably going to see some volume come into this play. But because you say, okay, probably volume is going to come in, doesn't necessarily mean volume is there. And this is the dangerous part about that, because you're saying volume may be here, so I'm going to get into it. When going long, it's not a bad idea to wait for volume to show itself, rather than predict volume to come into the play. And this is something I struggled with for a very long time, is seeing headlines, seeing PRs, and thinking, oh, I'm here before anyone else. I'm waking up at 6:30. Look at that PR. Volume's going to come into this. It's just the hottest PR ever. And then it's quiet. Crickets. It's just the way it is, guys. That's predicting. You're creating bias for yourself. Your ego's getting into the way. And usually this comes from, us wanting to be right. It's that ego taking precedence over good trading. It's our ego saying, I want to be right. It's all about you. It makes you feel good to predict something rather than just react to what is happening. And so that's where I am right now. Where is volume? What is volume doing? What am I seeing right now? Right now. What is the chart telling me right now? Not trying to predict what the chart is going to be saying an hour or two from now. That's not what we're about. So eliminate yourself from the picture, eliminate you, and just focus on what is happening, what you're seeing right now. Just focus on making money, not trying to predict. Prediction, very dangerous place to be, guys. All right, let's move on to number 4. No comfortable trading, only high intensity. 90%ers take comfortable trades, guys. Remember with the Bitcoin and that Bitcoin going up and up forever, you don't have to understand any of it. This is the thing with trading. Intensity. I trade intensity. I use intensity scanners. I'm just trading emotions. Human behavior never changes. It's always the same. So I don't know anything about Bitcoin. You see it going up, and then you start hearing people, the 90%ers talking about it. They're like, ooh, look at that. I'm going to start getting into this. I want to put some money in it. They're late. So the 90% are saying, this is going up forever. Let me chase. Let me FOMO into it. When the SPY market, this is something I got involved with. When the SPY was crashing because of the COVID, I was scooping and scooping and scooping that thing on up as it was dropping, taking advantage of the fear. You buy fear, you sell euphoria. But 90%ers, they buy euphoria, they buy high and they hope higher. It usually doesn't work on out. It usually ends in tears and blown up accounts. And so comfortable trades are a dangerous place to be. When the market is just calm and collected and people say, okay, the market's back to where it should be. Now I'm going to start, putting back into my retirement account and this gets comfortable. Very comfortable. No. Terrible place to be, guys. The scarier the better. When your emotions are very scary, that's a good time usually to take a position. When the stock's going down forever and you're like, oh my gosh, this is scary. It's usually a good time to buy. When it's going up forever, usually a good time to short sell. That's where the 10%ers are. They don't take comfortable trades. It's very uncomfortable. But what we have to do is learn how to be comfortable being uncomfortable. That's how you become part of the 10%. But you may be saying, Kevin, it's so scary. When you get into it, usually you're red on the move, and that's exactly right. Initially, when you get into some of these plays, when you're taking the opposite side of the move, you're usually red at first, and it's scary. It is very scary. And normally, sometimes you got to check your pants. make sure you haven't pooped your britches. And if you haven't, get more scared. You want to poop your britches. So essentially, number 4 and number 6 coincide with one another because number 6 says no single entries. No single entries, single exits. So most of the time, taking the opposite side of the move, you may not top ticket, you may not bottom ticket. But what you can do is scale into it. If you normally start with a 1,000 share position, cut it in a quarter, 250 shares. Go 250, 250. Then maybe add 500 to the position. And make sure you understand your risk. You predefine that before you enter the trade. You understand how much you're willing to risk. Because a lot of times on these moves, you may not have a specific support and resistance area. You're trading the human behavior. Number 5, no illiquid, no spready stocks. And that really goes hand in hand with the pre-market. And also, market day. If it's too illiquid, 10,000 shares less a minute traded. It's just too illiquid, too spready. I'm not getting to a stock that has 15, 20, 30 cent spread. Absolutely not. It's harder to manage risk when something's very illiquid and spready. I've been in that situation many times. I get into a stock, literally drops points in a second just on a few thousand shares. I'm like, ugh, it's the worst. So made a rule for myself. These are all rules I put on this board because I've been burned by most of these. It's exactly why these are up here. All right, so no single entry, single exits. Start a quarter, the position size quarter, third, and even on your winners, even when the stock is working for you and making money. It's uncomfortable for me to do this, but that's okay. You can still add to a winner. You can still scale into a winner. Allow it to continue to work for you. And another point I wanted to make on number 6, no single entry, single exit, is just that, it is scary to get in full position size going opposite side of the move. And that's why scale into it works very, very well. And because it is scary, it makes our emotions very heightened. And you guys know when our emotions are heightened, we oftentimes, our judgment's clouded and we make improper decisions. We don't make the correct decisions when those emotions are very heightened. And this is a way to eliminate those emotions. It's just to scale into it. It brings the emotions way, way down. One of my problems, for instance, and we're about to get into this, I used to just kind of take all my profits way too early. I wouldn't scale out of my winners, and that's number 9. And a way to mitigate that is to scale out. If you have a problem saying, allowing your winners to work for you, you just want to take all of it right away, this has really helped me out. It's just taking a partial, maybe taking 50% off, and allowing the rest to work for you. Just saying, okay, well, I've made money. I'm green on the stock now. Now let it work for me. Let it work a little bit. All right, let's move on to number 7, no more than 3x max risk. No more than 3x max risk just means, what are you going for on the day? What's your daily goal, daily quota, whatever, $100. All right, well, if your daily quota is $100, $300 on one trade is the max I'm going to do. And yeah, that may be a little too high. But if you're trading, 10, 15, 20 tickers a day, $100 a piece, $300 loss on one of them, you're fine. It's no biggie. And I got that rule in place for a reason. But it does get rid of, 3 winners, essentially. So you just got to make sure your consistency is good most of the time. 8, no revenge trading. I used to struggle with this one a lot, traders. And if you really want to know, go like 300 or 400 videos back when I was trading initially with CMEG, and I was revenge trading like crazy. I started with CMEG 2 or 3 years ago, and when I went from TD, I'd grown an account at TD, and I thought I was going to grow an account even more at CMEG. I'm like, man, the possibilities and opportunities are going to be endless. I can grow this thing forever. And I just started over trading, revenge trading. Guys, if something was moving, I was essentially in it. That's all there is to say. If it was moving, I was pressing buy, thinking less is more. You just got to keep that in mind. Less is more most of the time. So just be very picky with your trades. Number 9, we went over it. Scale out your winners. The idea here is patience. Patience spelled with a P-A-Y. Patience pays. Number 10. No more than 2 losses per ticker. This has really helped me with the revenge trading traders. Is just making sure that I only take 2 losses per ticker max. If I take more than 2 losses on one ticker, I'm done with it. And I've really been disciplined with that. Very happy. I've respected that rule very, very well. Some of you may need to apply that to your trading as well. It's been very helpful. I take 2 losses, I'm done with it. But traders, that is going to wrap up my 10 commandments as far as my trading goes, these trading rules. I'm really interested to hear about yours though. Let me know in the comment section below some of your trading rules that maybe I should add, or maybe that you've applied to your account and it's very, very successful. Some of these trading rules. I'm excited to hear about yours. Let me know in the comment section below. Don't forget, guys, hit the like button, hit the subscribe button. We will see you all next time.